The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon. Good morning, folks. Well, we got a lot of things happening today. We'll start out with the ones that are in the Pirate's Eye this morning, and that is the first ones are gold and silver. I've shown you the chart of silver. It looks like we're heading down to about 15.10. We're trading at around 15.29 right now. We're very close to that level. Now, gold, on the other hand, has made a bottom, the same bottom that we made back on June the 2nd. But frankly, with this big move we've had here in the last 30 minutes, it appears that we're getting ready for the market to make an ABCD pattern that will take us down to our goal that we've been waiting for a few days here, and that's down around that 1140 area. I'll put that in here so you can see what it looks like. That would be quite easy to get to that point. Today, that would put the market down. Oh, that would be a big move. It'd be about $30 lower in gold, but gold can do that without any trouble at all. So we're very, very close for the last stand. They've circled the wagons, and frankly, the chances of this trade working out, I'm a little skeptical of it. And I wouldn't recommend it for the faint of heart. You'd certainly have to be watching the market closely here, because there's going to be a lot of selling below 1150 in gold would be my guess. That's what I'm thinking, because we've got lower targets. We've mentioned this several times before, that we've got lower targets that are even down there a little farther. But this is the one this is the daily that we're going to put up here now and show you what we're watching here. If we get down to this area of around 1135, I have to take a look at it, because I'm going to have a big ABCD that's also, it's nearly perfect in time and price. In other words, if you take the high from May 19th, which was that big cycle day when we had Mercury retrograde. Oh, by the way, we're going to have Norm Winsky on tomorrow of Astro Trends, and we'll take a look at that. But if you take the high to the low, then we came down into June, then we went up into June 19th, and now we're coming down, and we have some pretty good symmetry. If it happens either today or tomorrow, is what we'd be watching here in the gold market. So there's going to be a whole lot of stops, I believe, below 1145, though the first ones will come in around 1155, and then after that, well, we hit 1155.80 today, so nothing's happened. So I'd say 1154 maybe, and then we'll see what's happening. But it looks like to me that we're getting ready to come down into the gold market quite a bit, and we'll see what happens. I'll cover the stock market stuff a little bit later, but frankly, the one that is the most interesting to me now was, of course, gold and potentially silver. But we've got another one that we talked about yesterday with our friend Mr. Z from Philadelphia, and that is the Treasury note market up around this 127 level. We've got bonds and notes moving pretty good this morning, so we want to watch this. And we'll start out with the notes, because that's the bigger market, and we'll be able to see. By the way, the pits are now closed in Chicago and New York. However, there are a couple of open outcry pits that are still working, and that is one, the New York Stock Exchange Index still has open outcry on their 13 posts, and also the NASDAQ options pit is working with hand signals. So they still have a pit in both of those places. It's very difficult, nearly impossible, to get on the floor of the New York Stock Exchange anymore. Years ago, it was relatively easy to get down there. All you had to do was know a member, but now you almost have to be a relative, and it has to be almost an act of God to get down there to be on the floor. So we'll wait and see. Okay, the first chart we're going to talk about here is the Treasury notes. These are the largest commodity that we trade here in the United States, well, it's worldwide. And what we're looking at here is we're seeing an ABCD completion up around this 127.10 to 127.16 level. And as you can see, the downtrend line on this comes in all the way to about 128, which is up near the 61% retracement at 128.20. We could easily get to 128.20, folks. There's nothing mysterious about that, because that would be nothing more than repeating a move that we had once before. Let me just show that to you so you can take a look at it, and you'll see that this would make a really nice parallel channel line, because it would be repeating the move that we had from March to April. Nothing more than that. And we go right into the channel line to take a look at it. And as you can see, that's the level that I prefer if you want to look to be a seller of the Treasury notes, would be up around this 128 level, which is about a full point away. So we are in a rally mode in this. We had the first objective was reached down there at 124, and now we're moving. We're starting to move higher. So we want to keep an eye on this, because when it gets to up against this 128 level, that's when you really want to start looking at it from the short side, because that's just a repetitive move in a downtrend. You've got 3 lower tops, one in let's rephrase that. We have 2 lower tops. We had one in April, and then we're going to have another one probably here in July or August, and that would be the ideal situation to look to sell the notes and bonds. Whether there's going to be a flight to quality or not in any of these markets, I'm not sure if that's related or not. Frankly, what I think is happening right now is just you've had a market that has been tremendously oversold. It's been going down for 7 months, January through July. That's 9 months. No, that's 7 months. What am I talking about? And so, we're due for a pretty good rally, and we're starting to get it right now. So, okay, now the next one that I wanted to talk to you about is the, just a second, where is it? There we go. Treasury bonds. I want to show you the bonds, because we spoke about this with our friend John from Philadelphia yesterday in both notes and bonds, and now we're really close to this pattern coming due here in the bonds, and that's going to come due at about near the 154 level. 153.31 is the 786, so we should get up there pretty easily, I would think. We have a really nice 786 retracement from the high on May 30th, and then we have a 1.618 expansion from the high on June 28th to the low that we made on July the 2nd. So that would have 2 major ratios coming in there, and that should give it some pretty good resistance. But boy, if we go through the 154 level, we could easily, and we talked about this, we could easily get up, to the 158 level without any trouble at all. That wouldn't be hard at all to do. So keep in mind that these are the numbers that we're looking at. They're only numbers. They're not based on any types of what we call fundamentals, which I know very, very little, would be being real kind, that I know absolutely nothing about. So that's the main thing. Now we're going to switch over here and do a little bit of talking here about China. First of all, China was down again. We're now going to break the move that we made in that FXI. We posted that yesterday to show you the importance of the 20-minute line that was right there. 1 second, please. Okay, we'll take a look at FXI here, and we'll see this line, because we are, what happened here? This is not good. Well, it shows it. Yeah, there we go. We can see it pretty easily now. There we go. Yeah, see, we closed right on the line yesterday, and with the market in China being down another 1.5% last night, this is going to break the level, and that means that we're going to be just hit the thing. I see silver just hit our target at 15.10, so we'll see if that's going to be any type of a bottom or not. Anything below that, I mean, you're looking at this market. Both silver and gold have looked so bad lately, folks. I mean, and believe, I love silver and gold, and I want to be a buyer of silver and gold, and I've tried it from a long side a few times, and it moved a little bit, and it allowed you to get out with a small profit or at least break even, but it just does not have any momentum to the upside. These commodities are getting hit, folks. I mean, this is not good. This is my whole premise of being so darn bearish on China. Besides the chart factor, folks, look at this chart for the FXI. I want you to look at something here just to show you how crazy it is over there. Okay, you'll see that spike that we made back here, way back up near the 127, up around 53 in the FXI. On that day, the PE ratio of the Chinese stock market was 250. Now, in all the years that we've been doing this, including 1999 and 2000, we had some stocks that were, much more than 250 price-earnings ratios. But the overall market, I think we never got higher than 30, is my guess. But maybe once or twice, but that's just show you how crazy it is over there. And what crazy is what crazy does, is what Forrest Gump would tell you, if you remember. And so what we're looking at here is this market's going to come unglued. We're going to be probably looking at that FXI coming down and maybe even touching the lows of 2011. That means it's going to come in half. I mean, this is really, really nasty out there, what's going on. If you remember, we spoke a little bit about what happened in 1929 with the market trying to be supported by J.P. Morgan and these other fellows that were really smart, with the help of President Hoover. And I wanted to show you this chart here, this correlation chart. But the problem with this chart, folks, is that the time correlation on this chart that the people posted on the internet is totally wrong. What they've done is they've taken the red Chinese daily chart and overlaid it on the 1929 weekly chart. That's what they've done. Now, the pattern itself is okay, but the time frames are totally different. So that correlation is really quite suspect, but the pattern itself is still there. So this is what I think will happen to that, but I'm not sure exactly how. Now, on October 24th, 1929, at J.P. Morgan's office, these big guys got together, guys like Rockefeller and Jay Gould and Bernard Baruch and a whole bunch of other people got together, and with the urging of Herbert Hoover, President Hoover, they wanted the stock market to go down. And so they decided that, we're going to put a floor into this market on October 24th or 25th. And J.P. Morgan made the statement that General Motors will not go below 50. He said, I will support that stock. The next day, J.P. Morgan went from 50 1/8 to 49 7/8 without ever, moving it up. And we'll get back and I'll finish the story anyway. Got to pay a few bills here for Tom O'Brien, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and silver has just broken 45 cents and has come down into the 1510 area that we were have the big ABCD there on. So we'll see. There's also we're near 1.27. We're taking out the April lows again, which is usually not a good sign. Now, it's difficult to buy silver here at 1510 because of this long-ranging bar that we have going on right now. It's one of the, if you look at this chart, you'll see it's one of the longer ranging bars that we've had. That means there's a lot of massive selling coming in, but it did stop at the right spot. The question is how do you handle this? Well, you have to be a person that really believes in these numbers and these patterns to put your order in to buy at 1510, which was the low of the day. And frankly, the chances of you getting filled at 1510 when it hit there just a second is not going to be very positive, I don't think. So the best way to do is to wait to see if this holds, because anything below 1508 would mean this thing is probably going to break down a whole lot more. That would be my guess, so we'll have to wait and see. Okay, before the break, we were talking about J.P. Morgan, the fact that he was supposed to support, General Motors in the market, and when Hoover called him back to ask him, why, there was no support at 50 on General Motors, Morgan just told him, he said, well, I changed my mind. It looked like it was going lower to me. And so that was his answer. So, these things can change quite a bit and you got to be careful. But what China is doing is not very good. Now, I wanted to share with you one of the reasons for my bearishness in China, and this chart was furnished to me by our friend Mr. Z in the den. It's a chart on iron ore going back 15 years, and it's up to date through May, which is close enough for what I want to show. And if you'll notice that the price of iron ore has been going down steadily since 2010, around July of 2010. Now, if this is really a boom going on in China, and believe me, China makes more of the goods in the world than anyone else, followed closely probably by India and Malaysia and places like that. I know the U.S. still makes a lot, but most of the goods, the smaller items, are certainly made in these other countries. That means that these products are either not being produced as much or not being sold as much, because if they were, the price of iron ore would be going at least flat to higher, but nobody's even interested in supporting and buying it. So this is usually not a good thing, but maybe it's different this time, and I think it is different because of quantitative easing. That's going to be the cat that spanks the dog, because it's going to be hard for these central banks to extricate themselves from all this debt that's out there that has been going on. This is not about stock market stuff, folks. This is about debt that's going on. I really believe that. I mean, we've had debt levels like we've never seen before. I mean, I've showed you, the debt in China, what's happened to that, over the past 15 years. And I'll put that in here because I think it's something we ought to always remember, because they went from $2 trillion in debt to $28 trillion in debt, a 14-fold increase over a 15-year period. And much of that stuff that they built is not, being used right now. Some of these cities and things like that are basically ghost cities. But we don't get the right news out of China. That news is definitely massaged, and they don't show the things that are necessary. I mean, some things happen in the news, like a murder of a Chinese official or something like that. Then you'll see more about it. But the new premier has committed himself to get rid of corruption, which he's doing. He also does not allow the really super rich people in China to go to Macau. They have to only go 2 days a month as opposed to unrestricted, and that's caused the price of wind stock to go from 300 to 100. So there are controls coming in there, and he is trying to work. But with this thing that's going on with the Shanghai Stock Exchange, what happens to be the third largest stock exchange in the world, followed only by the New York Stock Exchange and the NASDAQ. Then you have the Chinese market, and then, of course, Japan. But this is they're new to this, folks. I remember going back there in '95, giving my first talks to the graduate school in Beijing, and then from then on, I went down to Hangzhou, which is the silk capital of China. There's a huge university there, 127,000 students of the top students. It's basically the Harvard, MIT of China, and I think it's I can't make the pronunciation. Okay, we're going to take a little break here. Well, it looks like stocks are going to open a little bit lower, and we'll see what the bobbled heads will be talking about today. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted in to the Tiger TV, which I think is the most important chart from my perspective, and that is what's been happening to the New York Stock Exchange Index over the past 7 months. We bottomed in December. We had the big move up into March, and as you can see from this chart, that the cycle crested on the right side of the crest. That means that's high translation, which is bullish. We did the same thing from March to May 19th. We crested almost exactly at the same point. In other words, that means from the time down to the time up was equal in the ABCD move that was there. And so that tells us that this cycle was certainly powerful. And not only that, but it proved itself by bottoming on June the 8th. After the June 8th bottom, we made a perfect Gartley up at the ABCD level. And now we've broken down below the June 8th low, and that means you'll see that the crest of the cycle is now to the left of the of the bottom, which is of the crest of the cycle. That's a very negative thing called high translation to the left. That means the market rallies up for 2 weeks and then goes down for 4 weeks. So we'd be looking sometime late August, for a pretty significant bottom to come in here, but it'll be from a much lower level. As long as the market, doesn't rally up above, it'd have to have about a 5% rally to the upside to get the NYSE up around 1100, and then you would say, yes, this is wrong, and we'll have to reassess what we're doing. That would be the equivalent of about 2110 in the S&P futures. So right now, this market appears that it wants to be headed lower. We had a rally yesterday. Market was down quite a bit, rallied to be up a little bit. That's just a one-day phenomenon, as near as I can tell. The rally went to almost exactly 382 in the Dow Jones. It went to just under 50% in the S&P 500. And the NASDAQ could not even make a 382 retracement. It did make a 382 retracement in the NASDAQ towards the end of the day, up around that 4440 level. So that's what we're looking at right now, that the market should be getting ready to continue its journey to the downside. The rallies have been relatively short-lived as they go through here. They last a day or two, and that's it. Now, we've not had a situation in the U.S. where we've had multiple days, 5 or 6 down days, really bad days, like we've had in China recently, and then of course Japan, and then also Hong Kong has gotten hit quite badly too. It was down another 1.5% last night, but much of that is carryover from China. Remember, folks, the Chinese shares are all about China. You have to be almost have to get special permission to trade that stuff. They don't allow foreigners to go into those markets. There are a few able to, because they operate international hedge funds. They're allowed to do it, but that's a very, very small percentage of the Chinese market. It's less than 2% of the whole thing. And since we're talking about percentages in China, this is where I think the real problem lies. It's not Greece, because Greece is only 2% of the European Union, so it's something that you want to keep in mind here. So we'll take a look here for just a second and see what's going on. And we have a caller from Hong Kong. George, how are you?
Hi, Larry. I'm one of the students here.
I know you are. I recognized your typing.
Thank you for taking my call. It's my first time to call US. Thank you for listening to my call. Hi, how are you, Larry?
I'm good. So what can I help you with, my friend?
Can you since you talk in this show, you talk about a lot of things about the FXI, and
yes.
You mentioned that once it's dropped to below 43.5,
yes,
then the market will be a big problem, right?
Yes.
So can I ask you about your view in Hang Seng Index?
The Hang Seng Index, that's the Hong Kong index, and that still is quite bearish. We've come off quite a bit, but it's not nearly as bearish as the Chinese market. The problem, George, is that China is such a large economy and a large stock market compared to Hong Kong, that it's gonna affect the whole world, in my opinion, because most of the goods that we buy, either in Hong Kong, U.S., or wherever you are made in China. It's hard to find clothing that's not that does not been made in either China or India and stuff like that. So that's the problem. I don't know if you heard the early part of the show, as I put the chart of iron ore up to show that they've not been using much iron ore, and that's the basis of almost all building and stuff like that, and toys and stuff, because that's converted into steel and washing machines and all these other things. So something's not right about the data coming out of China. And as you know, being Chinese, some of the data that they have is massaged quite a bit, so it's very, very skeptical. So that's why my bearishness is so much. But that FXI has been telling us for quite some time here, for the last 5 or 6 weeks, that it wanted to go lower. And now with these folks, moving around, trying to put money into the market and it not working, that is just a tremendously bearish thing. So you got to be really careful being on the long side there. That's the way it looks like it to me.
Do you think it will like your chart, it will happen the big drop like the Dow Jones like in 1929?
Well, that chart in 1929 is not a good chart, and I'll tell you why.
Yes.
And that's because it's
daily,
a different
right?
it's a different time frame, George. The time frame
Yes.
in the other is different. One's a daily, and the other is a weekly. But the pattern is correct. It's just the time of the pattern is wrong. Now I'm going to post into the. You'll see what's happened now with the FXI. We've broken down. We went below 43.50. We gapped down today to 41.40. That just shows you how bearish it is, and this is just getting started. We were down 6 weeks. We might get a 2 or 3 day rally in here, and if we get a rally back to 43.50, I think that would be a place to sell the FXI. But it looks bearish. Once we went below that line yesterday, that told you that there was something really wrong. That's my opinion.
Right. It seems it's not right because I listen to your show. I always a big fan of you, because you remember 1 month ago you mentioned about everyone is talking about stock in Hong Kong and China, right? Even
Yes.
the waiter. Even
Yes.
my friends all around me, like some students, even university students, buy stocks in China,
Mm-hmm.
and the market go crazy in here in Hong Kong. So I listen to your advice and just observe, and the market dropped like 25%, I think, from the high, around 30%.
Mm-hmm.
Yeah.
Well, that's normal. It's just getting started, my friend. So just be really careful. You're doing good work yourself. So, continue to think of what George Chan is doing, and don't worry about the rest of the world. Just follow your charts.
To follow the chart. Do you think the Hang Seng Index will drop below the 786?
Yes, I do. Just because the emotionalism in China will help push it down. Yes.
Because today is hold quite strong on the level, above the level. I cannot short.
Well, I see it too because I watch it, but is at the 786. But like I said, I don't think it'll last very long. It got here. It got here too fast, George. It got down to the 786 way too fast. If it was a really good market.
Oh yes. Okay. Thank you for
Okay. Thank you for calling in, and we'd like to hear from you again. We'd like to hear what's going on in China, so please feel free to call anytime.
When you next time go to Hong Kong?
Probably be in March.
Oh really? March? You will be my guest.
Oh, I will take that. We'll go out for some good Chinese food.
Okay, yeah, March. Yeah, are you going to have a seminar here or?
I don't. It's too early. Probably not. Just to visit friends and students and stuff is what I'll do.
Oh yes. Thank you very much, Larry.
Thank you for calling in, George.
Look forward to see you. Thank you. Bye bye.
You bet. Bye bye. Okay, folks. We've just hit 2 targets. We hit the silver target, of course, and now we are right at the bond target. The bond target was at 153.29. So far, we've been to 153.28. So we're getting very, very close to this level here in the bonds to watch that. Now, this is. Let me give you a little. Let's try to stop slurring my words. Now we're at 128, 153.28 right now. Now we had a pretty good move here this morning. We're up about 2 full points. Well, not quite. But anyway, we just made the 153.29 level here in the Treasury bonds. Now, I'm selling there, and the reason why is I've got a 1.618 expansion of that number, and then I also have a 786, and this is much easier trade than the silver trade because the silver trade was a falling knife. This one is not so much because you have resistance at 786. Silver didn't have that, so this is a much easier move, to see if that's going to be the case. But we have hit the, I don't understand that question. I don't someone Skyped me something and I don't understand the meaning of it. And I was trying to read it. I'm sorry for being but I wanted to figure out what's going on. Anyway, the reason why I look at that number so well is because you got that 1.618, which is the end of the Fibonacci cycle. The way we look at it, anything beyond that, it's no good. So at this particular spot, you don't have to risk very much. So that's the bottom line of what we're looking at here. So we'll keep an eye on that as near as I can tell. So we'll wait and see what's going on. Oh, we got a caller from California. Mike, are you there?
Yeah, I'm here. Good morning.
Good morning to you. What can I help you with, my friend?
Yeah, looking at the price of oil, what are your Fibonacci's project for the downside now?
Well, once we broke below that 54 level, I really liked it at 55, but when we gapped down below it, it just literally really made it look like here. As a matter of fact, I'll be able to bring this up here and you'll take a look at it. The 61% retracement of this whole move back here comes in around the $50 level, which is another 5% lower than where we are now. Let me put this up so you can take a look at it. Okay. Anyway, I don't know if you're into Tiger TV, but the 50% retracement, Mike, from the March low at 42, we went up to 62. That comes in at 49.88. So that would be the number that I would be watching.
Okay, good. What's it at right now, please? I haven't had that quote.
Right now, it's at crude is trading at 51.82, making new lows on the day.
Right.
And so we're about $2 a barrel from that spot. So and we're through the 50% retracement. So the only thing left is the 61 on the 786, and I think it's going to make at least 61% retracement, maybe even lower.
And I was going to ask you then, psychologically, if we break 50, I would think, and basically, which is where the 61% is at. I know it's 49.88. Would you expect it to then plunge to a lower level or bounce there?
I expect it to bounce there. We're down 10 days now we've had 1 day up in 10 days, so we're very, very oversold. So I'm expecting some type of support to coming in around the 61% retracement. And then what I'd like to see is a 3 to 5 day rally. And depending upon what that rally does, it'll tell you what the next move is going to be. If it's a real shallow rally, that tells you that it's no good and it's getting ready to go lower. So that's how I'm handling it.
Thank you. Didn't mean to cut you off. Go ahead.
No, I tried it a little bit from the long side yesterday. I think I lost $130. I lost 13 ticks. It was a trade that had a little bit of profit in it, but it was acting so badly. It just kept going lower and lower that I got out of it with a real small loss. I didn't reverse and went short, which was the right thing to do, but that was not my plan. So
I short now with.
Good for you. Well, we should be, given the way we acted yesterday with the gap down below the 382 and the wide range down, more than 6% down in oil yesterday, I don't see how it's not going to make 49.88. That would be really surprising to me.
Okay, well, thanks very much. You have a good morning.
Thank you for calling in, Mike. I appreciate it. Okay, that was the chart for crude oil. I hope I posted into the room. Let me double check to make sure that I did. Okay, all righty, there we go. Okay, we got stocks that sold off a little bit so far this morning. The bonds have been up to our level here at 153.29, and not much is happening here, so we'll see what's going on here. Okay, we're all right. Next thing we want to look at is I've talked about the overall stock market and the New York Stock Exchange Index. We've broken those cycle lows. Folks, the trend is heading down in these things, so you've got to be really, really careful of what we're doing. Now, I wanted to, when we come back, I want to talk about soybeans, boys and girls.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hey, we're back, folks, and silver has broken below $15. That was one of the reasons why, you really can't. You have to respect those wide-ranging bars, folks. They're just very, very important. And that, we still have lower prices to come down now in gold. So that's another thing that we want to be watching also. So keep in mind, they do look lower. Now, the next chart that I'm looking at now is a current chart of soybeans. I posted in there the 2 ABCD corrections we had on the way up. We've got a third one working right now. We topped last week on July the 2nd at $10.40 a bushel. Now we're about 40 cents lower. We're coming in to a 61% retracement of the low that we made before the crop report. That's also the place where the old high was back in June, on June 26th. Beans hit a high of 998, and now it's coming back to that level, which happens to be a 61% retracement. Now, this is not a 20-man line because it doesn't have any trend lines that you can connect the highs. All you're doing is that you're looking at the old high, and in technical analysis, old highs and old lows can sometimes form support. Now, this one's forming support right at the 61% retracement, and so you're going to get a chance to buy soybeans probably around $9.98 a bushel, and if it's correct, it shouldn't go more than a dime under that. So you would not be risking more than 10 cents in November beans if that's what you want to look at, because this is a bona fide 7-day correction from the high, and it's doing it in ABCD format. So those are the things that you like to see. It's coming in exactly at the 61% retracement of our low on June 30th, which was also a perfect ABCD, but it was a 382, and then you saw what happened after that. So Gartley said is to buy ABCD corrections in bull markets and bear markets, and this is what we have, is a bull market coming in with an ABCD correction here in soybeans at $9.98 a bushel. Now, you've got to use some common sense here, because sometimes these things just don't flat work, and so you've got to be really careful. The 786 on this comes in at 987. That's around 10 cents lower. So that's what I'm seeing in beans. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.